Hello, everyone. Hello, everyone. Welcome again to the weekly review for the NASDAQ 100, where I basically go into what the markets did based on my analysis for the past trading week. So before we begin, as usual, let's just pray. God, we just thank you again for your blessings and for your goodness. And we ask that you will be with me as I do this review. If anyone watching this review, may it be instrumental to them and may we continue to improve on our trading. We pray. Amen. All right, guys. So I'm sorry, I'm actually not in my usual location this week. Actually took a little mini vacation. So I'm trying to do this video before I actually get busy for today. Um, as you know, I'm eternally bullish on the NASDAQ 100. Nothing has changed. Based on my analysis last week, I told you that I basically trade my higher lows and I intentionally um, go to my higher highs. Now, if the market does not do a higher high and it gives me a consolidated high, I take my profits and then I wait for my next higher low, which is guaranteed to come. Okay. So this is actually what the market looked like last week. As you see, I actually added some indicators that I've used in the past. I actually wanted to see exactly what the market was doing in terms of the continued consolidation that we saw towards the lower levels. So if you notice, those of you who have been following me for a while know that, I use indicators not as predictors, but just to confirm what I'm actually seeing on the markets. And the EMA, the EMA and the MA indicator, and also the ADX indicator is actually a very good confirmation tool to remind me that the market is in fact going, according to my bias and according to what I've been trading. Now, these tools are specifically helpful to me when there are extended periods of consolidation, which we see the market has been consolidating within a particular zone for a number of weeks or a number of months. Excuse me. All right, so let's just go on the large time frame for example. So let's look at our weekly. All right, so let me zoom this down and you can actually see on the weekly. A higher low has been created for the past 4 weeks, okay, where the market has been bearish for the last 4 weeks. However, remember, I mentioned to you that any sales that the market does are only temporary sells to create a higher low on the larger time frame. So what we see here on the weekly is that a higher low has been created for the past 3 weeks. Okay, and this fourth week, we got an extended period of consolidation. Now, what the market has been doing is that the last higher low and the last higher high price has been operating within that zone for the past 3 weeks. And in order to see this more clearly, you drop down to a time frame like the daily. All right, you notice the higher high, the low that has been created, everything, all the activities that have happened over the past number of weeks have happened within this particular time frame. Okay. As you go down in the time frames, so for example, you go to your 4 hour, you see that played out more clearly. You see a series of lower highs, a series of higher lows. You see a series of lows. The smaller down you go on the time frame trade, you will actually see those played out, a lot. All right. So going back to this week, you will notice, on the 1 hour, here are the opportunities for trade this week. Using the concept of taking your largest higher all the way to your to your highs, and then waiting for your next higher low before you go back in a trade. Okay. So this was the trade on Monday. Okay. Monday, I was actually in a sell, which I mentioned in the analysis video. Notice price came down and found support. Okay, once it found the support here, that's a higher low. So you look at your smaller time frame, like the 30-minute, you will notice that on Monday came down and created that higher low. It also went down, sorry, the higher low. This was Monday, created that higher low, which was the low of the day. Now that basically tells you that the market is still bullish at that point in time. Went up, it created that higher high. Look how that transpired on the 1 hour time frame. You'll notice that that actually finished the high that was already started on the 1 hour time frame by virtue of the fact that it has been coming from a low point on Thursday evening at the end of market close, and it continued all the way to the end of market close on Monday. So remember the concept is every time the market makes a low, it works itself to create a high. Every time it creates a high, it works itself down to create a low. The important thing is that you always have to remember that you need to be trading on your largest active time frame. So you need to be looking at all your time frames to see what's making the highs, what's making the lows, and trade those accordingly. All right. So this was Monday. Okay. Notice it came up, it made a high. Look at what it did. It worked itself, came down, it made a low. Okay. Here's another opportunity for entry. Get in right here, work itself up, came up, it made a high. Same thing, worked itself down, came down and made a low. So it was a really easy week to actually trade. You were paying attention to your largest time frames and trading from the highs to the lows. Okay. Now, every week, the market does the same thing every single day, every single week. Your job is to find out what time frame has been active, what time frames are actually giving you those signals that you need in order to actually take those trading opportunities. So as I mentioned to you, the safest trades for me have always been to take my higher lows. Doesn't matter what the market is doing. Even when you see an extended period where the market has been selling, so like in the past 3 to 4 weeks, the market has been selling on your smaller time frames, guess what? It does not change the fact that on my largest time frame, which in this fact is the weekly, let me take these off so you can see it, the weekly is currently at a higher. So all those 4 weeks that you saw for those cells, it's still only creating that higher low. Now, a number of things that you have to pay attention to. Now, for me, I'm not saying that cells are bad. All I'm saying is that based on my bias, by going with the trend, I take only my higher lows. Why? Because when I take my higher lows, eventually when the market breaks back in structure to create a new all-time high, I already have that in my bias that the market is actually going up to create another all-time high. All right. So let's go back to the 1 hour. All right. So this is going to be just a short review for last week. So you see all these opportunities here for trades. If you're only trading on your 1 hour last week and taking those higher lows, you had significant opportunity to take the trades. And like I always said, you take a higher low, the market signals a lower high, just get out. Wait for your next higher low. This low right here on Tuesday actually worked out to be a higher low on a larger time frames. Let's just mark it. So if I use my highlighter tool, I mark this here, I go to a larger time frame, let's say, for example, the 5 hour. See, at 5 hour was still a higher low. And if you notice on the 5 hour, for example, for the past 2 weeks, it has been creating higher lows. So although this lower low was on Monday of last week, it is still a higher low on your larger time frame. So if you look at your time frame, like the week in this case, all right, sorry, weekly time frame, yes, that's the higher low that was created, right? Okay, so going back again to your 5 hour time frame, you'll notice that on the larger time frames, you're only getting higher lows. And if you look at your 5 hour time frame, each time it goes up, every time it makes that lower high, it's okay. Take the trade, wait for a higher low to come back on again. And that's all you'll be doing. It's very simple. Like I said, it's simple, but it will take practice. You have to take practice to be able to see those moves and to be able to react with them. It's going to take some time to get the FOMO out because, of course, the fear of missing out, um, your emotions and everything, it takes a while to get it right. And like I said, for me, it took me 4 years basically to get to a level where I'm understanding what I'm seeing on the markets, where I'm comfortable taking my trades, taking my profits, and waiting for another setup because it is guaranteed to come. The market is 100% bullish. Any sells that you see on the NASDAQ 100 are only temporary retracements to create that higher. All right. So let's look again one more time before we go. So this was the one. This, of course, is my Sunday line. This again is my Sunday line. So all of this is the activity that happened last week. So you would have been in this trade. You'd have come out here. Okay. Market went up. Sorry. You'd have exited. You'd have taken another trade here because you have found the support. Even if you did not come out here, notice the market consolidated, created another higher low on your half hour before it actually shot up to create that higher. Okay? And then all you do is take your higher lows, get out on your lower highs. Higher lows, you get out on your lower highs. Higher lows, you get, see how many opportunities you have for trades right here. It's just a matter of being patient, practicing the strategy, okay, until you're comfortable. The last thing I want to say before I close this review video is that those of you who are still trading live accounts and keep losing money and everything like that, my advice to you always, do not trade a live account until you're 100% comfortable, okay? You can always trade a demo account. It's the same trade that you're going to take. And trust me, if you're not making money on a demo account, you are never going to make money on a live account because your emotions are going to be sky high and you're going to be prone to make much more mistakes. Okay? So practice trading on your demo accounts. When you're comfortable, then you can actually start with a small balance and then you can start scaling up and watch how your winnings and your profits actually multiply. All right. Now didn't touch on these indicators that I use here, and the reasons why I use the EMA and the MA. Okay. Once I look at my EMA and my MA, you notice the blue line crosses my red line. That tells me that the market is bullish. Okay. Now again, I'm not looking for these signals to tell me when to sell. I'm already in the buy. Okay, I'm already in the buy, so which means this just confirms to me that my bias was right. Okay, so I would have been in a buy from at this level right here. I actually took profit. I actually closed this trade on the weekend, on Friday before the market closed, and then I'm just waiting for another higher. Okay, I'll get more um I'll get more into this in the next video where I look at my upcoming analysis for the week, where I'll basically tell you and show you what I'm thinking will happen for the week. But as you can see, market started from a low here on 1 hour. I'm expecting it to continue working itself up to create that high point. Why didn't I stay in the trade? Well, because the market was actually very good to me last week in terms of all these higher lows right here on the 1 hour were opportunities for me to actually take buys. All these lower highs, all these high points on the 1 hour were opportunities for me to actually take profits and then wait for another higher. So the fact that I see a lower high here at the end of the trading day and everything, it's okay. Because if you come in from this point right here, look at how many pips this is. Like I said, guys, it is not hard. It's not difficult. You take this trade right here, that's 2,800 pips. I only need 2,500 to actually make to double my account on a particular day. All right. So it's the easy trades, guys. It's not trying to go against the trend. Now I know these cells look enticing for me and everything, but however, when I look at the history for the past 2 weeks, notice that the market found a bottom right here. And since then it has been making higher lows. Well, whenever you're in doubt, scale out. Look at your larger time frames. All right, let's look at the 3 hour. Notice? So you have a series of higher lows. So you have three higher lows. So you have one here, one here, one here. And you have this lower low, which was in fact a higher low. On the weekly, the market has been steadily climbing since. Now, the last thing, I know I said this maybe about 3 times before, but the last thing that you want to also look at is that each time when the market makes a sell-off like this, okay? Each time when the market makes a sell-off like this, you'll notice that it takes a while before it goes back to create that all-time high. However, it will come. There's no what do you call it? There's no doubt in my mind that it will come. The all-time highs will come. If you look at the NASDAQ 100, every single high that has been created has been broken. Look at your daily. Zoom out, look at your daily. Let's take these lines off. Look at your daily. Every single high that the daily has created has been broken. This is the last one that was created. And trust me, at some point in time, it's going to be broken. Just look at how these candles are formed. At some point in time, this high is going to be formed. Now, you may have some questions about these additional lines right here. It's not a new indicator. It's the same indicator that I use. And sometimes what I do to actually see my support points, see my resistance points, I just basically click on the indicator. I go to settings and I can turn on and off my support lines just to see the levels that the market is finding support and the level that it's finding resistance. That actually helps me a lot in terms of my analysis. So again, guys, like I said, it's all about practicing. It's all about staying consistent. And trust me, you will reap the rewards. If you are consistent and you're not putting a time limit on yourself and you're willing to actually learn and practice, you're guaranteed to see results. Trust me, Rome was not built in a day, okay? You will not get trading in the space of 1 month, 2 months, 6 months. It's a continuous process. It's a process that's ever evolving. It's a process where you constantly have to improve on your strategies. You constantly have to analyze the markets to see what's happening, okay? So that you can be comfortable taking the moves when they come. So thanks again for watching, guys. My next video is going to be the upcoming weekly analysis. As I said, I'm actually, I just took some time off this weekend, but I realized that I needed to post my review and my analysis videos for the upcoming week. So stay tuned, and the next video I'll post in another few hours. All right, have a good day. God, thank you again for your blessings and for your goodness. Anyone watching this video may be instrumental in helping them to be successful in this trading game we play. In Jesus' name, amen. All right, guys, take care. See you next time.